Morning, Steve Free in Chicago with the morning grain comments. Well, I think yesterday was the first day that we actually traded summer weather, especially in November beans when we made new contract highs. I think that as far as the weather is concerned, we're going to see some upper 90s across the Midwest this weekend. A rain event moves across the Midwest early next week, bringing showers to the southern plains and maybe the northwest corn belt, but then it may taper off as it gets into the eastern Midwest. The extended outlook calls 11 to 15 day maps warmer and drier weather. So we'll just kind of see if the crops get warm weather and rain every 2 weeks. That's perfect for conditions. But if we don't get those rains, then that could stress the crop. And I think yesterday a few people were betting that that might happen, and we actually saw corn open interest go up 22,000 contracts with new longs. Other than that, USDA came out and raised the corn rating to 75% good to excellent. They rated the first soybean crop ratings at 72% good to excellent. Normally it's 69. So those two numbers offered some resistance to overnight prices. Winter wheat harvest started out slow at 2% done versus 10 average, and the spring wheat crop is rated 79% good to excellent versus 67 average. So the crops are in excellent shape right now. So the weather is kind of key in whether we continue to keep those conditions above average and push prices lower, or if we start seeing the crops decline in July, prices go higher. I was at the annual Milling and Baking conference on yesterday. The speakers, first of all, felt that China's economy and their food demand was important for commodity prices. They also had little knowledge or any views on what's going to happen after the presidential elections to the markets. They felt pretty comfortable that weather is the most important factor for prices. The wheat speaker focused on bearish fundamentals, but he also said prices are low enough the end user should add to coverage. Corn speaker suggested that demand could be a little bit higher, but with the demand as high as it is, we cannot afford a U.S. corn yield below 162 to 163, or prices go higher. He estimated that final U.S. corn acres might be slightly below the USDA's March intentions. The soybean speaker was bearish. He also said that he looks for more soybean acres to be planted by farmers than the March intentions. The weather speaker did not think that 2016 weather was going to be like 2012's drought, but he did look for warm and dry summer across the southern plains, maybe working up into Nebraska and parts of southern Iowa. Funds yesterday, big buyers of beans, corn, and wheat continue to add to their record long corn position, taking a little bit off their record short wheat position, and they're adding to their long corn position as we get into the summer weather pattern. So June 30th seems to be the most important of the next two reports when the USDA gives us what the acres are planted out in the United States. So we're rolling the dice. Some people are thinking that this is going to be a dry summer and prices are going higher, but the true fundamentalists, the people that are looking at the numbers, are trying to sell rallies. As always, these are my thoughts and not those of ADM or ADM Investor Services, and have a safe and profitable trading day.